Hey, what's going on, everybody? Welcome back to another amazing episode of Beyond the Crete podcast. As you guys know, we are all about business growth. And today we have an awesome topic. Now, this is something that most people either don't want to talk about, don't understand how to talk about, but it's probably one of the biggest things to leverage your company for scaling and growth. So today we're going to be talking all about cash flow numbers, knowing your numbers, KPIs, and everything. So it doesn't matter where you guys are at in your business. Chad is going to go over all the numbers. So, guys, without further ado, please welcome Chad Brown on.
Hey, thanks, man. Appreciate it. I look forward to the discussion. Glad to be here because there's definitely a need, and the more value we can drop, especially with contractors, the better, man. So I appreciate you inviting us on.
Yeah, guys. And again, as we do, we always talk typically about the three core topics: the past, the present, and the future. So with that, kind of diving into the past, Chad, I'll give you kind of a 2-minute quick buyout, like who you are, what you do, and kind of, what we're going to talk about today.
Yeah. So Chad Brown, I'm a CPA. Started my career working in a CPA firm, kind of transitioned into some retail tax franchises that I own, working with corporate tax credits, hiring incentives, those sorts of things, as well as working directly with small businesses. That wasn't really a focus of mine early on. It was at the CPA firm, but over the last several years, it's kind of building our retail franchises, area developments, things like that. And then once we sold a lot of that and kind of downsized that area of our business, really is I wanted to bridge kind of that retail tax that we were providing to individuals and my corporate tax credits, that we could leverage the tax knowledge that myself and my team have and the corporate tax credit world with that small business in mind. And, in dealing with some of the tax credits over the last 2-3 years, especially with the employee retention tax credit and things of that nature, I saw just a significant amount of need out there to really help small businesses from a tax saving standpoint, from a knowing your KPIs, your numbers, your metrics, those things that help you make decisions. I love the past, present, and the future because numbers tell the story, man. Numbers tell the story of your business. You can look at numbers and see what's happening in an organization. So that's really what we're doing. We've been doing bookkeeping, kind of diving into that space. We haven't scaled it up yet, but over the last 3 or 4 years, I should take that back. We've been doing bookkeeping for years.
Yeah.
I just never marketed it, right? It was just something we did for some small business. Now we're going all in on it. And not only bookkeeping, there's levels to it, basic bookkeeping. Just have I'll show a business how to get numbers, right? I'll show you how to do it yourself, set up a free, just to get the basics, right? And then we can kind of transition into us helping and coordinating and setting up charts of accounts, KPI measurements, things of that nature. So just looking to kind of be that full suite to help small businesses, moving forward.
Well, that's huge. And you touched on a lot there, and we're going to dive into a lot of that because, that's what a lot of our guys are. A lot of our guys, a lot of people that are going to be listening to this are small contractors, owner-operators, 5 employees or less, maybe 10 employees or less, revenue, definitely under 5 million, kind of key metrics on stuff like that. But again, a lot of our guys, a lot of people listening, and I don't mean this in the wrong way, they're not 100% business owners. Like, we don't know, right? You don't know what you don't know, right? And so if you don't track it, like you said, numbers are factual, right? So math is factual. And I think I've seen it, and what we do is huge on the coaching aspect. And like this is knowledge is, if you don't understand where you want to go, how can you track where you are? Or if you don't know where you are, how are you going to track on where you're going, I guess, right? So
yeah,
as you've kind of dove into that, you've taken a lot of that corporate knowledge down to the I'm going to call it the small contractor level based. Is a lot of that knowledge still transferable, or when people seek out a CPA, should they seek out somebody that is made for small business?
Yeah, for the most part, I would say yes. The unfortunate thing out there, and I'm part of that world, right? It's an ecosystem of that traditionally, your traditional CPA firm, right? Where they're so busy. They're just like any other business. They're so busy playing catch up and reactionary type work that it's tough to be proactive and work hand in hand with the small business. So when you say whether you need a CPA or just business coach or you might not find the same person is an answer to all that. So don't just say I need a CPA, because if you do, you're going to get in trouble, because most CPAs by nature, they can advise, but they're so busy doing the work. So I would say, for small businesses, they need somebody that can help them answer the why, right? A lot of the contractors, and I see it a lot, especially in our retail tax offices that we own, they're sole proprietors. They went out and basically created a job for themselves. Basically is what they did. So they do the work. They don't have any employees. Maybe they got some folks they contract with to help them, subcontractors, that sort of thing. But they created a business for themselves or a job for themselves because they had a skill set, right? And there's nothing wrong with that. But there's a difference between a sole proprietor creating a job for yourself and a business owner. What to me, business owner implies I want to grow something beyond me, right? Where I can now have others doing work, provide more value to the community or to my clients, but I'm not doing everything. So and there's a transition from that sole proprietor that has a job to making that decision to be a business owner, and then opening the roadblock is opening up your mind to what does that mean, right?
Yeah.
And that's where you need somebody that has maybe been there or seen it transition and been in business for themselves before, because they get that. Because I was there. You might have been there at one point. Then you transition to a business owner. You didn't know what the hell you were going to have to do. You're the IT guy, the bookkeeper, everything, right? So then you transition. Okay, this is what a business owner is. You join groups, right? That's how we met. The Arte, Apex, different groups to be around other business owners that we strive to be like. And then you start learning the pieces and pulling yourself out of that business. So,
yeah. Well, and that's huge. And I'm kind of writing down some notes on that. And I want to talk about that because, again, that's where most of our guys are. Most people, at least in our industry, they are owner operators, right? You might have your LLC, whatever corp you technically are filed under, that's fine. But you are typically going to be the guy who's wearing all those hats, but they want to grow, right? So they're wanting to find labor, find good help, find a sales guy, an operations guy, whatever that looks like, and just either not fully understanding how to do it. And the other one thing that I definitely want to talk about is cash flow, right? Okay, because understanding the cash flow maybe of what it takes to do that, like maybe from your side of things, like what are you seeing limiting guys from doing that, or like going to a bank, right? So you make $500,000 in sales last year. I want to go do $1 million this year. Like, what does that look like from your standpoint?
yeah. Well, it starts with the past, right? You have to know historical numbers to know what it costs you to do a job. And that means materials, supplies, your time, and maybe you're not tracking your wages or your distributions or something against particular jobs, but you really got to dial in how much profit is built into each job. And really, you got to start with the end in mind, right? What kind of bottom line or what kind of margin do I need to hire this person over a year, right? Or a month, whatever, to plug in there. So you have to know what your gross profit margin is. And then you start with that. You got to kind of have an idea of what all your OpEx, operating expenses are. So many times and then you've got to track it by job. And then you understand where your costs lie and where your margins are. And is there enough margin in the job to hire that individual, right? So if you're looking at just your gross, not even your operating expenses, your gross margin, you're going to hire a person to come in and run a crew, right? How much is that going to cost you over the course of the year? How many jobs do you expect that person to do? How much do you need to increase your gross profit percentage by to cover that and get a return on that investment? Okay. so many folks don't know that. I'm working with a client right now that we're addressing that specific challenge, and they do 2+ million.
Yeah.
You know, but everybody's hungry at the end of the day, and they're like, why are we hungry? Well,
Yeah.
it's because you're paying yourself a wage that's far less than you can make out in the world working for somebody else, like a bigger company doing this, because you have value. You have a skill set that's very valuable. So to be in business for yourself, there's got to be a return at the end of the day, a distribution, something, right?
Mhm.
Or you've got something that you're going to be able to sell down the road that's real value and not tied specifically to you. Well, you can't just go through the motions to do that. You got to look, where were the numbers? Where do they need to be? And then adjust the numbers and say, does that make sense to the market? You know?
Well, that's a different level too, right there. Cause you got to understand your market, right? So let's just say somebody, I've been in Minneapolis here and Omaha area, kind of stuff like that. We look at somebody say Kansas City, St. Louis, Las Vegas, right? Every market's different. In our industry, it's a thriving industry and market. And you're also the same because taxes aren't going anywhere, right? And stuff like that. It's awesome. So when we understand that metric, and we know that, let's just say we've been in business for a year and we are doing $500,000 this year and we want to get to $1 million, right? You've tracked your jobs. You kind of start to do that. Those are KPIs, right? You learn your key performance indicators, right? So like, what are you typically are talking to home or any small business about, like KPIs? Like what are the key performance indicators that everybody should be tracking?
Yeah. So number one, gross profit per job.
Okay.
You know, that's number one. And then, you know, one that I find is important in most cases is, you know, return on employee.
Mm.
You know, how much revenue is each employee generate? You should know what, if I hire you, Pete, to run a crew for me, I know how much revenue I want you to generate
Mm-hmm.
for my organization for that year. And if I know how much revenue that you need to generate, I know how many jobs you need to do. I know how much that's going to cost me in payroll, because I know my gross profit margin I'm going to add to the bottom line if I bring you on. I know that it's not blue sky, right? Because I've looked at the historical data. I know what the history is telling us. So I just add another piece and then repeat. That's how you scale. You know, so revenue per employee is a big one. Another one that we look at is percentage of payroll to the job.
Mm.
A lot of time, small businesses, especially in the contracting space, even, you know, in our firm, right? I look at the hours in a job and I understand what our realization, our gross profit per job is. And it's a little bit different in my industry than yours, but the math is the math.
Mm-hmm.
And I determine, I know where I kind of want to be on a bookkeeping client.
Yeah.
You know, if I need to have a certain gross profit. So we track that hours in each job.
Yeah.
For tax planning, for whatever it is, we kind of have those KPIs in place.
Yeah. Well, and I think you mentioned it earlier, and I think one of the biggest things that, again, we see as owner operators is we're not tracking our own time, right? Or you don't put value on our time. How do we get that conveyed to a homeowner that you have to track your time? And what's a valuable time? Oh, I make $25 an hour. Like I bill myself out at damn near $500 an hour, like lawyer type of shit. Cause sometimes some people are more valuable than others, right? You have certain probably hours, right? You bill like a lawyer, right? You bill hours. Contractors need to do that too. If you're an owner operator, like how do guys start tracking that?
Yeah, we use an app to do it. The app we use, I believe, is called Harvest. It's a new one. We just transitioned from something else, but we were using Harvest now, so we track the time per job. Time card. I mean, you can use your normal time cards and then your accounting software when you're entering payroll to pay folks, or your accountant is entering payroll. Get it set up so you are putting it in by job. It's not a hard deal. And you know, if you get QuickBooks Online or some of the other tools and time entry, they can actually clock in per jobs. You just have to add the jobs every time you get it, you know, so it tracks it. But from an owner standpoint, there's different variables, right? I mean, sometimes you're in the suit and tie and you're, meeting with the $1 million guy, to do
Right.
tax planning, right? I mean, that's a higher level stuff. But if you're running jobs, think of yourself as your next hire to run crews. What are you going to pay them? So I would allocate a portion of that to each job if you're doing all the jobs yourself. Now, if you're an S corp, you kind of set up payroll, but in an LLC, you're not paying yourself a salary per se. It's generally through distributions, but you need to take those distributions, whether it's a haphazard distribution when there's money, or if it's a X amount a week, you need to apply that amount to how much of it was tracked as job 1, 2, 3, 4, 5, as well as, what was kind of admin time, or for what we call typically in the books as a class for company or corporate initiative, meetings, networking, marketing, not tied specifically to a job, so to speak. So you have to track your time, and I would track it if you're doing it. And the most important thing to track your cost is what it would be at the job, right? You can't bill yourself at $100 an hour if you're doing a $50 an hour job.
Right.
So who would you hire to put in that place and start acting as if you're that guy? You're an employee of the company, right?
That's huge. That's awesome.
Yeah.
It's a good way to look at it, actually, because I mean, I didn't think about it that way to a certain extent. So, I mean, that's huge, guys. If you were going to be hiring somebody on for $30, $40 an hour, right? That's what you're going to be billing your time out as, right? That's a good metric to track. And again, we have owners that are going to be on job sites, say 8 hours a day, right? So $40 an hour, right? So track there's your cost, right? Because again, once you can get out of the business, you've already job costed that guy you were going to hire for that specific role. So you already know exactly what your labor cost is going to be. It's creating that metric and understanding the numbers.
Yeah.
So when you get off, the numbers don't change.
And here's one way to do it, man. This is quick and dirty.
Okay.
Get an envelope. You get a new job, you sign up a new client, put their name on a damn vanilla folder, right? And then keep track of your time on the inside of it. Just write it down. 2 hours, 3 hours, 5 hours, 6 hours, and the date, whatever it is. Put all the receipts for that job, or the amount of your, maybe in your world, maybe you use 5 gallons of epoxy or whatever it is.
Yep.
No, the technical terms. Of the
Yeah,
stuff.
that's all good.
Just jot that down, and then go through and put the hour by your time. Your hourly rate by your time, calculate it. What does it cost me for 5 gallons of epoxy? Put that down, put everything down, and then put the amount you collected. Just put it in the same envelope, everything for that job. If you don't have an accounting system set up.
Yeah.
And look at that. That's quick and dirty, and you can have that envelope sitting right there.
Yeah. Well, we tell guys to track that because again, when we buy materials, right? So I can tell a customer and say, hey, your cost per square foot is roughly X, right? Then you're going to have tax and shipping and labor and blah, 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 right? So they're going to have metrics that they're going to track. But we tell everybody, like, this is what it should be. And then you track what it should be at the end, right? Because we have waste, right? So if I just mix up like my water cup and it's extra, right? That could be $20 worth of garbage, right? Yeah. So you're tracking your numbers. So you know what we call our job or our cost per square foot, right? That's how we track our cost per square foot. Cause then we know our metric, right? And that's when you build your gross profit based off of that. So we're in the same boat. Hey,
gross profit. Let me bring up if you want a 30% gross profit, I'm not going to go into the weeds and everything. You don't just look at cost and add 30% to your cost. Because if you do that, your gross profit is going to be like 26, 27%. If you want 30%, you got to reverse engineer the math. It's not cost plus a percent. All right. You have to take 0.7, whatever your markup is, or your gross profit is. Let's say you want 25% gross profit. So you take your selling price and divide it by 0.75. Right. Okay. So there's an equation to it. I can get you that information, but there's a misconception that cost plus 10%. That's going to be like an 8.5% margin.
Yep.
Not a 10% margin.
Yeah, and I'm finding that too, because we actually hired a controller now that is in-house every day. And that's his thing, right? He's just like you, he's numbers, and it's huge. And so I'm learning a lot of that type of like high level shit that usually Melissa and him deal with, but he's saying a lot of that type of stuff. But again, it's very important to know, because that's the same thing that we can talk about, right? So if that's your cost per square foot and you want to make a 30% margin, right? Like you said, here's your cost, add 30% and you go. Well, then at the end of the day, they ended up working 2 more hours on that job site, paid the guy this, they wasted some material. So they thought it was 30, it was actually 25, and realistically it's down to like 15.
Yeah.
And understanding that metric. So guys, down below in the description of all this, you're going to have Chad's information. Don't bombard him with just random questions and stuff like that. But these are the type of questions that you could ask a CPA or somebody who understands numbers. And on that, here's a question for you. And I think this is a kind of a softball for you, but we get a lot of customers that are just starting up, brand new to business, right into here. We train them, we kind of get them going. How important is it to have a CPA or an accountant or somebody that's going to start understanding your numbers and books from the very beginning?
Oh, I think it's critical. I mean, I really do. If you're just getting started out, maybe cost effective, you're trying to pinch pennies and that sort of thing. I get it. I've been there, man. But it's very important to at least have that conversation.
Yeah.
And to have a conversation with someone like me or on my team, for an entrepreneur just getting started, there's free consultation, and you can ask a number of questions in 30 minutes, 15, 20, 30 minutes, whatever it is. You can follow our content, on social. You can listen to our podcast. So we shoot a podcast. You're going to get value, but it's very important to not just say I've got taxes and look at taxes and payroll tax and income tax and sales tax and all that as a compliance issue. Look at it as a business ops issue. Now, you didn't question, spending $5,000 for that course to go down to CP and his team so they could train you the right way to do business, right, in this world and generate that revenue.
Mm-hmm.
Okay. It's just as important to spend a little bit of money, not nearly, as much in training, but to talk to somebody, just to have somebody's ear, and get some guidance. And there's tons of resources out there to do it. The problem that happens is your contractor, your sole proprietor, if you're good at what you do, you're going to be busy. Right.
Yeah.
And so you're not going to focus on the book. So that's the one thing that, your priorities over here, the financials is an oh shit come April the next year, right?
Yeah.
Because now you're reacting to something. Yeah. And whether it's an upset client or whatever, reacting to something is no way to handle it. Being proactive to something is the best way. And it costs you less in the long run, and it provides more of a return on the back end. So, like I met with a client the other day, I said, just looking at your books, I know I can find you 3 to 5%.
Wow.
Just looking at it and cleaning it up, not necessarily hard numbers, the cost, because they're pretty dialed in. They're pretty clean. Okay. Right. But in lost margin, easy. They're a $2 million company.
Yeah.
What does 5% mean to a $2 million company?
A lot.
$100,000.
Yeah.
It ain't that freaking hard.
Wow.
So you gotta have that information available to make those decisions, right? Because I have people come to me occasionally and say, my business is struggling and da da da. Okay, what are your numbers, man? Let's look at the story. Let's look at the story, because we can find. Well, I got a bank statement. Well, now you want to pay me a couple $100 a month to go clean that up so we can actually get somewhere. Start now, because it's going to cost you. It's whether it's tax compliance, lost opportunities, lost margin. It's going to cost you at some point, whether it's 12 months, 24 months, 30. It's going to cost you a hell of a lot more. I mean, I'm another client, man. They bookkeeper did some stuff, did some stuff, and then didn't do some stuff, both of which created a huge problem for them.
Yeah.
Right. And I'm talking the tune of 20 to 30,000 in interest penalties.
Oh,
stuff, compliance stuff. They have their ducks in a row.
Government's not stopping. They're getting their money. So
yeah. And so they save money for a few years.
Yeah. Yeah.
And now they're going to pay, you know what, a ton more than what they would have. And their business would be better off had they hired somebody.
Right.
Like
right. And we say everything in our world like 30, 60, 90, right? You've heard that through all the coaching and programs and everything like that. So, and again, our guys are really good. They're good sales guys. They're good floor installers. They're good at marketing. They're good at that. 95% of them, if I could just speak for them, they're probably not good at being accountants. They're just, that's not what we do. Right. And I know, again, for Melissa, that was like her one thing that was like, I don't want, I can look at the numbers. I don't understand it. Right. So you hired that out, literally why we have a controller now, because it's not what we do. And again, when you pay say you pay an accountant $250 a month, okay, whatever that is, let's call it $200, $6,000 a year. Well, in our world, if that frees you up from doing that amount of labor, right? It's like accounting work. You could have just sold 1, 2, 5 more jobs, probably a month. You paid somebody $6,000. You probably just made $60,000 because you're 10 extra revenue. And I think we understand this because a lot of the coaching we've done was delegate or hire somebody to do the shit you don't want to do.
Yeah. Listen, no, you're right. I can guarantee most contractors I know, and I'm not, pointing anyone specifically, a couple things. They're either spending $200 to $300 a month on Starbucks or Busch Light.
Yeah,
at least in Council Bluffs, Iowa, right? Where we're at, it's either Starbucks or Busch Light or both.
But yeah, exactly.
You know, right? But to your point, it's cheap. It's actually degrading to yourself because you're saying, I'm not good enough to generate the income to pay for it with the time I'm saving by someone else doing it.
Yeah.
Don't even look at the upside. Don't look at the coaching, the story the numbers tell you, right? Don't think about it. You're covering the cost just by generating additional revenue.
Yes.
Right. Just think about what knowing your numbers will make your business more efficient, your margins more consistent.
Yeah.
And your profitability go up. And that's where profitability is where the value comes, right? And I don't know your industry inside and out, Pete, but if you're a solopreneur, it's very hard for you to sell your business at the end of the day.
Yep.
Right. Very tough because you are the business.
Yeah. And I want to get into that. I wouldn't say we don't have a ton, but I know a fair amount of guys that are selling businesses right now and stuff like that. EBITDA, right? So obviously it's an acronym, long, big term that you can kind of dig into and stuff like that. But, and again, one of the things that we talk a lot of times about is building a brand, right? You have a company, you build a brand, then you build a self brand, right? And you got to build all that. But when we talk about wanting to maybe exit a company or having value to a company, and it's tied directly to one person, one thing, or an entity, if you will, your EBITDA, right? Your cost or basically your value goes down, right? Because what are you seeing on stuff like that? Because that's basically what you just said. You just didn't break it down.
Yeah. So if you're typically a solo independent contractor, and again, there's no problem with that. It's very respectful. You got bigger balls than 95% of the people out there, right? You're doing your thing, right? But you can also position it to sell. But like you said, EBITDA, earnings or earnings before interest, tax,
and appreciation
appreciation and amortization.
Yep.
Yeah, sorry, appreciate your help.
Yeah,
you sure you're not an accountant?
No, well, I've heard the number enough.
Yeah, so if you've got, let's just say that number is 100,000, right? But you're a solopreneur, you might get 2, 3 multiple. I don't know. I'm not a business valuation guy, but that's kind of what I've seen. If you're doing, revenues in the $2 to $5 to $10 million range, and you've got a team that's generating that business and running your business for you, and it don't matter if you're there or not. Right now, you got these private equity guys that are coming in, right, and buying 10, $15-20 million businesses.
Mm-hmm.
Do you think those private equity guys are going to come in and run your team? Probably not, but they want to get into these trades businesses because they're lacking out there. I mean, the talent coming in, so they're buying them up and consolidating them like crazy, roofing, all these trades. I would probably throw you into kind of similar niche
sure.
type businesses.
Yep.
They're buying them, but they're paying 8 to 10 EBITDA.
Multiple. Yeah.
Yeah. So, and that might be a little high, but they're paying more than, if you've got a team, the business is running without you, you have standard operating procedures, you've got systems in place that the engine is just turning.
Yeah.
Right. And you could be, they don't care about you.
Yeah.
Right. They're not buying you. They're buying the system.
Yeah. 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 And that's huge. And that's something that we talk a lot about to our guys too is, I mean, when I teach and everything, like we have our exact, right. We have an SOP, we have A to Z of how you install the floor, right. That's awesome.
Yep.
And everybody goes and does that and does their own thing. But a huge thing that we also try to talk about is systems and processes within the business, right? If you're marketing, you get your lead coming in, right. And then you got this, boom, right. Everything's set. So again, if you stepped out for a week, right? There's always that, can you go fishing for a week kind of a thing, right? Can you step out of the business for a week and happy to be Ryan? But that's one thing to consider if you guys are starting to look at considering selling your business. Okay. So again, you could be that solopreneur, which most people listening to this are, and it is unbelievable because you guys are doing things like Chad said, the most aren't, and you're making good money at it. You are, but what can you do or what steps can you take to get that multiplier, right? You might not be selling for 20 years, but if you look at a 20-year goal and you set it, I want to sell it for $5 million, right? Like, what do I have to do between the next 20 years to get that shit in place?
Right. Right.
So,
yeah, no, that's spot on. And we lose sight of that sometimes in the short run, because we're just so busy doing the work. So, with all of that being said, $200 for a set of books, minimum cash basis financial statements. Okay. Get something there. And, I'm working with the team. We're looking to, partner and put some things out there in the financial space, business lending, credit repair, a whole lot of things, because I worked with them in doing some of the tax credit work and everything. And we were just kind of alarmed by the numbers of folks that don't have good information, and if you want a business, especially if you go to the bank, everybody starts there, right? I just go to the bank and get some money, right?
Yeah.
They need at least a couple years of financial statements. They want to see a trend, upward trend. They want 2 to 3 years of tax returns, and they don't want to see you losing money, right? There are some add backs and things, but as business owners, the mindset early on is I don't want to pay any taxes. Okay. There's effective ways to do it where the banks can see, whether it's through investment in assets and depreciation. Okay. Banks see that. That's an add back, but you might not pay taxes, right? You might show a tax loss, but overall it's not a cash loss. Anyway, I'm getting kind of into the weeds, but anyway, there's strategy to not paying taxes. But let's just say you're a contractor and you're writing off everything under the sun, your meals and all that stuff. You're going to eat anyway. It's not a deductible expense unless you're buying it for your team. You're hurting yourself because you go to the bank, you show a loss. They probably won't touch you. Okay. Now, then you're pushing these, out kind of alternative lending sources, which there's a need for them. There's a fit, but there's good and bad fits, right? Some that will work with you to get your business in line, like you're showing a profit, showing you're taxable, planning for that tax, or doing some effective strategy. That's our role in the game. So they can get you to where you can go to a bank and get a lower interest rate. But anyway, simple, just start with setting up a $150, $200 bookkeeping arrangement. That's what we do, base level, less than $10,000 in expenses a month. We're not doing all the job costing and things like that, but that's an add-on. We can look at that. We've got a system set up where we can help you very affordably. And it helps you understand the story. It keeps front and center what what the focus is of your business and where you need to make corrections. And we help plan for taxes, that you're going to owe on the money you're making,
Yeah.
So.
Yeah. Well, that's huge, guys. It's crucial information. Again, Chad's information will be down below. Real quick, we obviously work with customers coast to coast, and people listening to this will be coast to coast. It doesn't really matter where they're located. It'd be something you guys can work with them. Everything's pretty much digital, everything nowadays, right? Doesn't have to be in Council Bluffs, Iowa.
Yeah, 100%. In fact, we prefer it that way.
There you go.
I don't, yeah, I just turned down a client here locally that they wanted somebody to come on site. I said, that's not our game. I mean, we don't do that. It's inefficient. We don't need to. We can service it outside the office. Communication is better, and wasting an hour or two a week in driving is not good for you, for us, or anybody, right?
Yeah.
So it's just not a fit for us. And so our preferred client are those that we can work with remote. We can set up systems, processes, and everything from an accounting standpoint to really make it affordable and get them the data that they need. For instance, if they're under 10,000, a month in expenses, which a lot, I don't know where they're at, it'd be a couple $100, right?
Okay.
And then we have add-ons for if they want to track, job costings, like a $100 add-on.
Yeah. Yeah, it's all reasonable.
And then we can set up system and show you how, and you pay for the QuickBooks subscription, how you can snap pictures, assign it to a job and load it up. And then our team codes everything and processes it right way. So your job costs, and you're doing all that stuff for a couple $100, $300 a month.
Yeah. Well, that's crucial too, because I'd say majority of our guys most of guys are running QuickBooks, right? Online. So, I mean, they have access to all this stuff already. And it's just a matter of either not knowing it, like what it does, how to do it, how to categorize it. So I've learned a lot of that, right? Like products and services and cost of goods. And then you have meals and marketing, right? There's so many different buckets you put shit in without knowing that, or even knowing that you should be doing that. That's where that money is spent.
Yeah, no, that's the QuickBooks Online subscription is easy to get.
Yeah.
Right?
Understanding it is a whole different world.
You can link your bank account, but if you don't know where the hell things need to go to give you the desired outcome, and the data you need to make decisions. It's but that's what we do. I mean, and so we can set up where it's very efficient, very cost effective, and you get financial statements every month delivered to you and dashboards that say, here's the number, and you can compare month to month, and run different analyticals on it, but at basic level, get a set of books, make sure your chart of accounts is set up right, and somebody is categorizing that stuff in the right bucket. Because if it's not in the right bucket and it's not accurate, it's going to mislead your decisions.
100%. And I've seen it. So guys, as we kind of start to wrap up here, I want to talk about kind of the future. Okay. So usually what we do is we always pretty much talk to our guests. And so basically I would ask Chad, say, well, what do you see for the future of your business? Right. So again, I'm going to talk about that, and you don't have to give away any of your secrets by any means, but like, what are you guys doing to grow, prepare, right? Like what strategic stuff are you guys doing? And then I want to get kind of a little bit more into the weeds about 2024, the economy, and kind of what we're seeing on that shitty level also too. So like, what are you guys doing to grow?
Yeah. So for the big thing with us, we're really simplifying the bookkeeping process, right? Me being a CPA and having worked in the traditional firm setting, it's probably taken me a little longer to see that adjustment, that tweak that we needed to make in terms of our pricing and process and systems, the way we deliver our service to the client. So escaping that and really putting it more on a subscription base and understanding, man, like I just said, anybody can connect a bank account on QuickBooks, right? We all got these phones now. Everybody's got some tech savvy to them. Even if they say they don't, and they've got a cell phone, they've got some tech savvy. Yeah. That's really all you need to set up that transaction. The value comes in how we structure the deal and, the chart of accounts, how things are categorized. So we're really becoming more focused on that end result, right? From our standpoint, we set it up knowing that in the end user needs to look at this to make decisions that will improve their business, their family, their community, everything around them. So that's kind of our focus.
Wow.
Is really dialing that in. So not just the bookkeeping, right? It's the other pieces. Now, how do we help them understand what those numbers mean? So there's a scale to this, right? Base, you get them set up, right? Chart of accounts, show them how, that sort of thing. Then we can do a lot more add-ons to say, okay, this is kind of what we can do. So that's really our focus right now. And from that, once we start working with clients to get their books in line and they're making the right decisions and they know their numbers and it's kind of, how do we help them save taxes? Because now we know they're going to be profitable.
Mm-hmm.
We know their goal might be to scale, so they're going to need some money, right? Typically financing,
Mm-hmm.
whatever. So we're building towards that from a bookkeeping, a business structure standpoint, key metric standpoint, tax standpoint. So becoming more of that, hey, we don't want to work with you unless you're going to not. People pay us monthly, not at the end of the year when we do their taxes. Now, our retail tax side, it's transactional. They come in and we do their taxes, boom, 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 boom.
Yeah.
Right. But Kinstler Brown, working with small businesses, it's a monthly fee. We help for bookkeeping. We can add on tax services, that everything that is needed. Financing, we have relationships there that we can tag you into those so that's what we're doing, is becoming kind of that, not the axle, but being able to, we're parts of that spokes coming out, and then, working with a team and it's a program coming out. I can't disclose what that is. With the center spoke, we're going to be partners in that, a full suite, man.
Wow.
And it's really, it includes tax credit. It includes a lot of stuff that small businesses need. And we're just, preferred partners in that. And then we're going to be an investor in it as well.
Okay.
But one-stop shop, essentially.
Yeah. That's exactly what I was just going to say. I mean, that's a one-stop shop for pretty much not everything money, but at least having a resource for that. Right. So again, when you have a resource like that, and it might not be the perfect fit, or you're not going to go and buy X add-on, right? Okay, I'm not there yet. Well, then somebody like Chad's gonna be like, okay, well, don't do that, but then go watch this podcast, or go listen to this, right? Or go talk to this guy, right? It's resources and connection. So two last questions, and I'll leave the more difficult one, I'm gonna call it, for the end. Actually, I'm gonna ask three. I'm gonna ask three.
Okay.
I'm gonna ask three. We didn't really get into it, and keep it kind of brief, but the ERC tax credits, okay? Like, either most people don't know about them, you hear about them. Like, I know you're big on them. They're obviously crucial for business and stuff like that. Touch on it. Like, how can you guys, or what are you doing to help people with that?
Yeah, 30,000 foot view ERC, and employee retention tax credit, is a credit to companies that were impacted negatively by the shutdown. It has a gross receipt reduction component to see if you qualify, as well as and I won't get into the actual elements of it, and whether you were partially shut down or fully shut down, right? So if your business had some interruptions and stuff, it's at least worth exploring, right? Or your revenue went down because you weren't able to service commercial, whatever. It's worth exploring what it is, but it's up to a $27,000 or $26,000 tax credit from January, or from Q2 of 2020 through Q3 of 2021. If your business started after March 1st or February 15th of 2020, you qualify as a recovery startup business, and you could qualify for up to $50,000 in retention tax credit for Q3 and 4 of 2021. The key is you got to have employees, right? And have payroll. And if you got PPP, you can't use the wages that you used to get forgiveness for PPP for ERC, but it's up to a $26,000 tax credit. 2020 is limited to $5,000 per employee. It's the first 50% of the first 10,000 in wages. That's capped. In 2021, it's 70% of up to 10,000 in wages. So $7,000 credit per quarter. Wow. Per employee.
Okay.
Okay.
That's huge.
So
that's something.
Yeah, it's a big deal. And if you have any questions on it, we can definitely take a look and see if you qualify. Right.
Yeah. Well, that's just it. And I know you and I personally have talked about this and stuff like that, offline and everything. And so that's why I just want to kind of bring it out there that it might be something else for everybody to dig into.
Worth exploring.
Absolutely. 100%. Okay. So question number 2, we know this personally because this is how we met, but business coaching, connections, relationships, and understanding that learning from somebody that's probably been in business longer than you, maybe a little bit more knowledgeable than you and X about it, doesn't matter. How important is business coaching to anybody in the world?
Yeah, I would say business coaching is tremendously important. Depending on how you define coaching, I would say mentorship is very important. Being in the right groups is very important. I kind of box them all because we get coaching from people we're in groups with, but we're surrounding ourselves with people that are where we want to be. And I forget who said it, but if you hang out with 5 millionaires,
You'll be the
you're
sixth.
probably going to be the sixth.
Yeah.
But if you hang out with 5 alcoholics and drug addicts, you're probably going to be the sixth. So, for me, I've always been around, professionals in the industry and things like that, but it changed for me in 2019 when I joined a group called Apex. That's where we met at a deal, and got around people that were doing like way better than me, and then some less than me. So it told me something. I'm not doing everything I can do. And those limiting beliefs that said all this shit that I see other people doing isn't attainable for me, that kind of went away. I see that it is. Then I see people below me, like, I can bring them up as well. And I am worth, I've done something, right? I've created something. So that's a beautiful thing. And, giving in the community, that's it's really, I'm going to be honest, it's 10X my life all the way around. In doing that, right mindset. And just, I'm going to be honest with you. I am around some people now that are doing things that you think you're never going to be in those rooms, but it's easy to get in them. You give some value. You might not be able to give as much value as that guy that's worth 100 million, but you can give some value to the guy that's doing less than you or on the come up with you. You create networks. I'm working with some guys that are starting a business. The valuation is insane. Yeah, it's insane.
Yeah, right.
And I'm like, these guys, they a whole lot smarter than I am. So it's very important.
Yeah. And what I found out too, and I agree 100% with everything that Chad just said, and is we always try to level up, get in the next room, right? And for the smartest in the room, try to get in the next room. Got it. But you'd be surprised when you actually talk to some of these, what we might consider high level people that are a next 1 or 2 steps up from us. They're actually very willing to help. They actually want to help because they're everything that Chad just said, because at one time they were probably where you were at because they were helping the guy right below you. You're not going from here to the moon in one step. We got to keep taking it one at a time. And I found that too, is when you talk to these people that you are looking up to, they are actually going out of their way to help you. Like we see this in RTA and stuff, like the connections, and people just jump on a call. Let's get on a call. Like, okay, you're going to give me 30 minutes of your time for free. That's invaluable.
Yeah.
So
it's a big deal.
It is huge. So
the game changer.
For me, it was
beyond hiring a bookkeeper and accountant and CPA. That's probably number 2, man.
Yeah, exactly. Number 1, 100%. We just talked about that. We hire Chad first, hire a business coach.
And I recommend you do some business coaches. Right?
Yeah, exactly. No, it's true.
No,
so, all right. Third thing, and this is where it's going to get kind of interesting because I want your take on what you guys are seeing in the economy, right? 2024. We talk about it maybe going into like a winter type of a season, right? Not physically cold winter, but you know what I'm talking about, right? Like we've heard it from our customers where maybe prices are not dropping, but it's getting harder to get the money. It's harder to get a sale. It's cost per lead, right? All that's getting a little bit trickier, almost pre-COVID times. COVID had it pretty well good for a lot of people. Like, what are you seeing on your side of things? And what can some of these small businesses do to get ahead of that curve?
Yeah. So a couple of things on that. Yeah, we're seeing it too. One of the things that I would warn, your listeners and that all those that you work with from doing is cutting all of your costs, like marketing and stuff like that. You might need to be a little more strategic on it, but See, a lot of your competitors and people are going to quit marketing because they're going to be suffering. There's opportunity because people are still going to need the work, right? And even if you're not making as much margin on the work as you once did, that population is going to be bigger, right? Because a lot of your competitors are going to just roll up the carpets, the economy's down, nobody's buying, and create some sob story in their mind. So don't, maybe be more strategic, but don't eliminate it. The other thing is, know your numbers. And Pete, you're like me, man. I mean, we might go on a event or down to an Apex and go to dinner and have your tabs a couple $100 because you had this. Well, when that's okay because you're in the right rooms with the right people, but now some of that maybe you're not spending the $200 on the meal. So go through your financials and see where you were a little wasteful.
Yeah.
And prepare, because I think it's going to get tough. We got to understand, businesses got PPP. A lot of businesses got PPP, and so that benefited them to a great extent. A lot of businesses got employee retention tax credit. That benefited them a little bit. It was cash flow that they didn't do a whole lot, at least in the traditional sense, to earn.
Yeah.
They had liquid, and businesses that got those. Who do you think owns the business? People that buy epoxy floors in their mansions or their big houses or their nice houses. They like nice things, right? That money's gone, right? For a lot of them. So it's going to be tighter. Banks are tightening up. Okay. So if I'm a small business owner, I'm telling all of our clients, go through your financials, scrub them. Where can we find the 10, the 15, the 20, the $1 a month savings that we don't think is a big deal, but it adds up over the year?
Yeah.
Figure that out. And if you don't have numbers and it becomes very difficult. You're going to be exposed to opportunities if you have done that and plan strategically going into this downturn. You're going to come out winning.
Yeah.
Don't be the business that makes excuses. Sometimes, what did Warren Buffett say? When the economy is great, don't buy. When the economy sucks, buy.
Yeah.
Because you're going to get more of a return on the upside.
Yeah. Yeah. And again, we hear it from our high level coaches and stuff like that. And I talk to our customers about it too. And I always say, in these type of times, you double down, right? I'm not saying, literally you're doubling your marketing costs or anything like that, but you'll be surprised if you don't stop. The amount of market share you're going to grab when we come out of this is going to be huge, right? So you're going to be able to 5x, 10x your investment by just keep going and just putting more and more down. Because once 1, 2 of your competitors quit, whatever that is, you gained that market share. And like Chad said, is instead of making 30%, you made 28 or whatever.
Yeah.
But when it comes to 2025 or 6, whenever this maybe ends, you can go back up to 30. But more importantly, you just have a whole entire deeper list of people to contact because you don't have your stupid ass customers competitors that bailed on you.
Yeah, I would say, no, that's 100% spot on. One thing I would say is, your business might slow down.
Yeah.
But there's going to be business out there for you to have. When it's slowing down, don't go sit at the bar or the golf course or whatever, waiting for it to pick back up. Go introduce, in your industry, I'm sure this is right. Go meet every freaking realtor in your community.
Yeah.
That's selling homes in certain neighborhoods that folks would like to have a nice floor.
Yeah.
Seriously, that doesn't cost anything but time. So do those things. Start becoming that go-to person in the industry. So when you got downtime, go shake a lot of hands and get to know a lot of people. It's going to pay dividends. So be ready.
Yeah. And that's exactly what we say too, is especially on the commercial side of business, right? So if we have a lot of guys want to get into larger scale commercial jobs. Well, it doesn't just happen overnight. You need to go meet that GC and you got to go shake hands with them probably 10 or 15 times and go to an event or go do them solid a couple times before you're actually going to get that. But if you don't start, you're never going to get it to begin with. So that's what we're seeing. So guys, this has been awesome. This is very enlightening to be able to talk to Chad about the numbers and everything like that. And guys, if you want Chad back on, comment down below, and we can kind of dig into the weeds a little bit more and stuff like that. This is a very over 30,000 foot view on numbers and understanding it. But again, key takeaway, start with your gross profit. If you know where you need to do, that's your first KPI you need to track. And then we talked about your hours, right? So tracking your percentage of labor per job and stuff like that. So guys, huge thanks to Chad. Real quick before we go, Chad, all the links and everything for you will be down below, but are you okay with everybody kind of maybe reaching out to your firm, your team, and kind of maybe set up a consultation?
I love that. I will send you over a link, Pete, to where they can schedule a call, and they can indicate whether they're interested, tax planning, bookkeeping, all of it, whatever. We'll jump on a quick call, see what the interest level is. And, if I can help in any way, I'll give some free advice. If you don't want to pay somebody to do bookkeeping, I'll tell you where to go get it for free.
Sure.
It might not be right. I won't set it up for you, but at least you'll have a start, right? And sometimes the hardest thing to do is start.
Well,
because a lot of times when you start, you're admitting that you're a little off in the path, right?
Well, we didn't even get into that, but obviously we're some pretty hard-headed construction guys, so maybe we might have a little bit of an ego,
Right.
So
Gotcha. No, 100%. I'll get you that link, but happy to chat with anybody. Anything I can do to help, whether it's, bringing revenue to me, or it's just a simple, hey, how do I do these things? How do we get started? Free, whatever I can afford. I'm here, man.
Well, I appreciate that. And a lot of the guys, everybody's going to do, because again, guys, that's resources and knowledge given away for free. Again, links will be in the description. Remember, Chad's got all of his social media, his podcast. I know I personally follow it. I see it, obviously, because we're friends, but it's information on numbers and taxes and everything that everybody should know. So guys, these numbers, doesn't matter what you do for business, it's going to work no matter what you guys need to do. So anybody that's listening, that's new to business, or not just our industry, but anybody, find a CPA, find a mentor, find a coach, find somebody that can understand your metrics and start learning the key ways to do that. So guys, I really appreciate Chad for coming on. Guys, if you have any comments or anything below, check that out. One last thing, again, that I'm going to talk about on my own personal level is we have the Concrete and Coatings Mastermind coming up in February of 2024. So this is all about business growth specific to our industry. So what this kind of means, as we're talking to Chad, is we're going to be having, I would love to see if I can even get Chad there to talk about this, because guys, we need to understand the numbers. We're having sales and marketing and coaching and leadership and customer service and everybody that's very high level in the industry talking, but we also need to implement cash flow and business. So when people spend, $1,000 on a ticket and a flight and a hotel, you're spending $2 to $3 grand to invest into, say, like this mentorship or business coaching. Well, that's great. And then learn the tactical stuff that these people are giving you to implement it back to your business. So again, I teach everybody, you can go spend a couple $1,000s. Like Chad and I, we went to Texas, we met, we went and had dinner. It was great. We went and shot guns. Cool. That was an investment, but that investment can easily 10x what you paid when you implement and you learn from the people that are coaching. So that's my spiel on the Concrete and Coatings Mastermind. Chad and I will talk offline about getting them there and talking about that. Everything for the description down below will be there. Guys, in this industry, we need business coaching and leadership, and that's what this is all about. So if you're looking to level up in 2024, all these podcasts, everybody that we have on, the events, everything's based around that. So guys, click on those links below. Again, Chad, thanks again for coming on. I appreciate all the knowledge and everything and the links. And again, guys, if you guys need anything, you follow, subscribe, do all that type of stuff. So again, it's been another awesome episode of Beyond the Crete podcast. And if you guys have any questions, drop a comment below and we will see you next time. Appreciate you guys.